These two investments create more millionaires than any other investment around. When it comes to investing, there's no better mainstream investment like stocks and real estate. In this video, we'll go over stocks versus real estate to discover which is the best investment for you, and we will go over the pros and cons of each. Welcome back. My name is Alex Sanchez. If you're new to investing, chances are you're wondering why and how you should start investing. If you aren't new to it, I would love to know what your opinion is and what your investing strategy is down in the comment section below. There's so many ways to invest your money that it can be pretty overwhelming at times. Investing might sound confusing, but it's actually fairly easy as long as you do your research and you learn at the expense of pretty much free. Seriously, everything you can learn is free and it's all on YouTube and in the internet. The two most popular ways to invest is to invest in stocks or to invest in real estate. The stock market is a phenomenal way to invest. I mean, just ask Warren Buffett, who at one point was the wealthiest man in the world. It can be pretty lucrative and it's a great vehicle to invest in for your future. Meanwhile, real estate keeps gaining popularity over the years because of big real estate moguls like Grant Cardone and the President of the United States of America. We will look at 5 key metrics to help you decide what to invest your money in. At the end of the video, I will discuss which one will build more wealth over time. The 5 key metrics to solve the debate of stocks versus real estate are reward, difficulty of investment, taxes, and last but not least, risk. Key metric number 1 is reward. You obviously want to know what kind of reward you will get for the money you invest in either stocks or real estate. This is also known as return on investment, or ROI for short. Let's say you invest $10,000 and 1 year later that money is worth $11,000. Then you can say you made a 10% return on investment. More on ROI on another video in the future. Now that we have that out of the way, you need to know how you can actually get paid investing in stocks and how you get paid investing in real estate. Stocks pay you in 2 ways. Stocks pay in dividends and in value of stock growth. So the most basic way a stock pays is in dividends. And to put in simple terms, dividends are what the company pays you, the shareholder, for being a fraction owner of that company. They basically pay you for investing in the company. You also have some stocks that don't pay in dividends, but they do pay in growth of their stock valuation. For example, Amazon stock value has skyrocketed in recent years, but they do not pay a single dollar of dividend. And therefore, sometimes this has a higher ROI than actual dividend payments. Real estate pays in many ways like cash flow, debt repayment, property appreciation. But for now, we will only stick to cash flow. Cash flow is related to rental properties, and that's how much money is left as profit after you receive your rental income and you pay your monthly debt repayments, such as your mortgage. If you're interested in learning more about how real estate makes you money, you can find more information in the video up in this corner. It might be on this corner, not sure. Furthermore, it's not fair to compare stocks and real estate as far as the reward because there's so many factors, but for the sake of this video, we're going to assume you will be investing in a broad market index fund, like my favorite, the S&P 500. We are also going to assume you already hit the like button on this video. And since inception, the S&P 500 has brought investors an average return between 9 and 10% per year. Of course, some years were less and some years were more. Real estate returns vary on average. A Zillow article claims property values, also known as appreciation, have gone up about 3% on average year after year. But the thing about real estate is that you make money in different ways. I invest for cash flow, also known as passive monthly income. It's very common in my area to see returns as high as 15 to 20%. And that's only based off pure cash flow. That doesn't include other factors. Now, the thing we have to look at is which investment is more liquid. An investment liquidity factor is basically having the ability to liquidate your investment into cash. Sometimes cash is needed and it's needed fast. Stocks are investments that are fairly liquid because you can sell a stock in the matter of a day to a matter of just a few seconds. Depending on the market hours, if you're an investor that sees comfort in liquidity, then stocks are a safe bet for you. Being able to have cash ready at hand is important at all times, sometimes because people get tied up and they need access to cash because of a financial setback, and fairly liquid investments are your best choice. Real estate investments can take anywhere between 1 to 6 months to liquidate, also depending on market conditions. Sometimes it's nearly impossible to liquidate your money in an investment property because of a market crash. Only way to liquidate into cash is to sell for a loss. At that point, no one wants to lose money. If you own real estate, you have to be able to weather the storm with your own cash reserves in case you're looking for quick cash. The third metric we have to look at when investing in stocks versus real estate is the difficulty of getting started investing in either or. Stocks have to be one of the easiest investment vehicles because nowadays investing can be done anywhere in the world as long as you have internet and you have a smartphone. Investing in stocks is super accessible and it's fairly practical. There are two options when investing in stocks. You either invest in a single company stock or you invest in a broad index fund like I mentioned earlier. The S&P 500 is your best bet when investing because it's a very safe and diversified fund. On the other hand, when you have a single company stock like investing in Alibaba, Amazon, Apple, investing in stocks is relatively easy because you can start investing with little to no knowledge, just common sense, and most likely still do well. You can invest in stocks with as little as a few dollars, so the cost of entry is relatively low. Real estate investing, on the other hand, is a tougher investment to get into because you can't just jump in without any prior education. You can make a lot of money investing in real estate, but unfortunately, you can also lose. Not every real estate property or market is good to invest in. Some properties have high expenses like taxes, insurance, and sometimes even repairs. And real estate also requires you to have a lot more money in order to be able to jump in. The difficulty is higher for the average person because it would require them to save a down payment of at least 20% for residential real estate investing. The fourth metric is taxes. They say there are only two guarantees in life. That's taxes and death. When it comes to paying taxes, you better believe that every investment is getting taxed. I know it's very unfortunate, but supposedly it's part of the American dream. To start off, money made in the stock market is taxed at two different levels. You have what's called short-term capital gains, and you have what's called long-term capital gains tax. Any stock you buy and you sell that you've owned for less than 1 year is considered short term, and therefore you would pay taxes as if you were working a W-2 job. Long-term capital gains tax is a tax on profits from a sale of a stock held longer than a calendar year. Long-term capital gains tax depends on what your regular tax bracket is, but it usually ranges between 0, 15, and 20%. Now, these are the taxes you pay if you don't have a tax-advantaged retirement account, such as a 401k or a Roth IRA. In those accounts, you get better tax advantages depending on your income. Now moving over to real estate. Real estate profit made from rents gets taxed at whatever tax bracket you may be in. But the thing about real estate is you can write off things like mortgage interest, taxes, insurance, repairs, and there's another huge tax write-off due to what's called depreciation. In short words, you get to write off the property over 27 and a half years due to the property deteriorating over time. With the amount of deductions you can write off, you should be able to have rental properties that you don't pay any taxes on. Depending on your situation, talk to your financial advisor, and please don't sue me, bro. Real estate can be very well tax advantaged. Not to mention, appreciation of the property value doesn't get taxed, and even when you sell your property, you can structure it at the sale and what's called a 1031 exchange and avoid paying taxes on your profits. Last but not least, the last metric to consider for both of these investments is the risk associated with them. Like I mentioned before, investing in stocks, you have two options. The safest route of investing in a broad market like the S&P 500 or investing in single stocks. Single company stocks are riskier because if you put all your money into one stock and that company goes bankrupt, well, so have you. You lose whatever money you invested in the company, but your safest bet is investing in the companies that will continue to prosper in the next 10, 20, 30 years from now. Either option comes with a risk because your investment is at the mercy of the economy. The investment isn't risky per se, but it's risky in the sense of having an investment that is out of your control. Look at the last month or so. The stock market tanked, and I'm sure a lot of people lost money because there were a lot of scared people that sold, which was not the prudent thing to do, but some people didn't have any other option. Real estate, on the other hand, can be low risk or high risk as well. Real estate can be super risky if you don't know what you're doing and if you don't do the math calculations right. It can also be risky if you over leverage with too much debt and not enough cash flow. Investing in real estate is awesome because you can leverage the bank's money and therefore give you a higher return on investment. But some people go overboard and leverage too much with smaller down payments and less cash flow. Low cash flow and high debt repayments during a market turn like '08 and '09 is a recipe for disaster. Both stocks and real estate are very good investments if you want to eventually build wealth. Each form of investing comes with its distinct pros and cons. Stocks are easy to invest in, especially if you just want to have a set it and forget it investment strategy. Real estate can cough up serious returns if done right with a bit of due diligence and general knowledge. I can attest to both investments as I personally do both. In my humble opinion, real estate is a very practical investment that, if done correctly, can build huge amounts of wealth. At the end of the day, the most important thing is that no matter what your route is, make sure to just start and take action. Let me know down in the comment section which investment you think would be a better one for you. If you like this video and you want to learn more about either real estate or the stock market, please feel free to support this channel by gently smashing that subscribe button. And also, if you're new to the stock market world and you want to invest, remember Robinhood gives you a free stock that can be worth millions. Just kidding, the stock can be valued anywhere between $3 and $150. Again, thank you so much for watching this video, and I will see you in the next one.